Happy New Year, everyone. Thank you, Kevin. Same to you. Sala, yes, the interview begins in 1 hour. We go through the markets with our community for the first hour. How's everyone doing today? So a new year and a new guest for us. Hello, Paul. Everyone doing okay? So I wanted to basically talk. It looked like they had maybe snuck in a low in the dollar. Thank you, Hugh, on Thursday's shortened session. That hasn't happened, but I would be careful. There's glaring daily divergence here in the dollar. In fact, I think it may end up being a turnaround Tuesday. Look at the divergence on the 4 and on the 2 and on the 1, still diverging. 15 is the only thing. So 15-minute short term, be careful there. We're also in the S&Ps. Happy New Year, Monica, Didier. When you look at the S&Ps, they're a little bit stronger than NASDAQ here. See NASDAQ. S&Ps had made a new high on Thursday before New Year's, right here. While it took some sharp dollar weakness for the NASDAQ to do it. So this could be a turnaround Tuesday short, up around 13,000. And the metals, of course, went bananas. Silver threatening this breakout. We'll see how it closes. And I want to point this out since Amanda was asking me about this last week, and I said that the Kiwi still had some work to do. If we get, this is really the weakness. Actually, the commodity currencies are the weakness besides cable. Cable losing some momentum despite the fact that there are no EU taxes on feminine napkins, may I say. So the Brexit's big benefit was no taxes on, you guys know what I'm talking about. And the weakness, really, when you think about a weak dollar, and you think about strong equities, crude made a new high and diverged pretty dramatically. So with the metals all screaming and the dollar under big pressure, euro on the verge of making a new high that will not confirm as well on the 4-hour. And look at where cable failed right from this 1.272 fib extension up around 137, coming off now. So potential for a reversal day, maybe even, I know it's early, potential reversal week. So I am looking for reversals in a lot of different things this week, not for, anything major, just corrections. I think that we can have a correction in the S&Ps as well. I know I've said that before, but this is what I'm thinking here, is that we get some type of 10% correction here. If we take out 36, and I know it looks like it's a long way away from it, arithmetically, say we top at 38. So 38, and we break down under 36, would give you 34. And then one more rally into next year up around 4,200 would be the arithmetic target if we break to 34. I know that's a long way away, and maybe I'm wrong, which wouldn't be the first or last time, but I'm looking for turns in the dollar and looking for turns in equities and looking for some turns in some of the weaker currencies. In fact, the whole board, even though euro is leading the way, is not going to confirm on almost every time frame. Here's the 2 and we're not at new highs yet, even though the dollar is, and the one. So don't get too bared up early in the year. And I'm not looking for, what the dollar bulls are looking for. But what I think can happen is wherever we get this low here, maybe it's 89, maybe it's right now, is that I'm looking at a monthly off number here. So here's the monthly, and then I'm going to turn it over to Blake. But for the dollar to reverse, it would have to close above this monthly close, which is 91.86. So, I'm not talking about a home run ball. I'm talking about maybe a rally back to 91.86, 92 for starters. It's kind of looking like a wedge here. And maybe we can turn this thing this week. I think there's a possibility of it now happening. And want to welcome everyone to Face that is new. We're starting the year off with Saladin Boumidi. Should be a great guest for us to start. I have a full calendar of excellent traders all week long, capping it off with Charlie Gasparino, a broadcast journalist, print journalist that I've been following for years. Looking forward to talking to him. And you guys know that we have our promo going now, right? So this is a week to act, to invest in yourself in 2021. Some excellent deals. Let me move you guys around. Okay, so deep discounts. And I'm happy to begin another year with a crew that really cares about traders and invest themselves emotionally and with their work to help you guys succeed and stay alive. So welcome everyone who's ready to have a good year. Give me a Y. You got to be ready, and you have to declare it. Let's declare it. I'm going to have a good year. Everyone say that. There's something about the spoken words. Text it. Okay, you have to say it and hear yourself say it. Okay. Okay. All right. So join us. It's an investment in yourself. And if you've learned here in Face, you've made some pips here in Face, that's a way to say thank you. And this is how we say thank you, by offering discounts at this time of year for everyone to get off on the right foot. Happy New Year,
Dale.
Blake Morrow.
What's going on? Happy New Year, buddy.
How are you?
I'm doing well. I want to, there's a lot to be said for affirmations, and I truly believe that. I mean, if you tell yourself, hey, listen, this is going to be a good year. Mindset is such a big part of it, especially in trading. It's easy to get down on yourself when you're trading and you have a bad run, but you're the one that can turn it around. You're the one that knows what works in the markets. Yes, you have tools and you have, team members like us that can help you out and give you some ideas from time to time, but really ultimately it's up to you. And what I found for myself is, because I know what works for me. What works for me doesn't always work for you. And I always tell people that the way my trading's evolved over the years, especially when I went from being an independent trader to trading, for a firm. And so I'm trading much larger size. I've had to make significant adjustments over the last couple of years, which has resulted in, some tough changes for me. But ultimately I know what works. Like, I go back to my basics and I say, okay, I'm struggling here. So I just go back to doing this, this, and this. And I know that works most of the time. And that's why having that affirmation, like, I'm going to have a great 2021, and saying it and hearing it and feeling it it makes a big difference, because then you're going to adhere to your rules more than likely when you're in a trade, or you're thinking about taking a trade, and you're like, look, that doesn't meet the criteria I need it to meet before I take a trade. And then you're less likely to make those, silly mistakes. So there's a lot to be said for that, Dale. So kudos to you for getting everybody off on the right foot.
Thanks, Blake. I heard an interesting metaphor that, picture yourself as a ship, and the ship is big, but what steers the ship is the rudder, which is a small part of the boat, right? One of the smallest parts of the boat.
Yeah.
And for us as people, what steers the boat, the rudder for us, is our tongue and what we say. And so the things that you declare is what steers your future.
That's a great point. It's a great point. I like it.
Anyway, there's the end of Philosophy 101.
All right. Well,
okay,
hey,
buddy.
we do. First of all, I want to say that having Charlie Gasparino here on Friday. I mean, I've been listening to that guy since CNBC days, obviously, like for the last 20 some odd years. The guy's a wealth of knowledge, and so and seeing or hearing kind of the back end, or maybe some of the behind the scenes of what he gets, it's going to be pretty interesting to hear. I'm sorry, in my opinion, I didn't sleep very well last night. It's like I slept, but the good news is I slept really well the whole my whole vacation. So that's good. Anyway, I think it's because I was antsy about getting back to work, and so I just didn't sleep well. But
I'm glad to be here.
There. It's gonna be an exciting week. I want to say and reiterate, if you guys haven't taken advantage of the ForexAnalytix offer, do so, because as I've been telling you for the last several weeks, this only comes around every once in a while. And for those of you guys that have been around for a while, that it only does come around every once in a while. And I'll see you guys in the chat rooms. I mean, you want to see where I'm at all day. This is our chat room, just so you can see. And I want to show you what it looks like since I've been up. Oh, okay. Right here. So about 4:50 in the morning, somewhere right here. Oh, it was 4:50. Yeah. So this is where I got here this morning. This is all the chatting that's been done in our chat rooms since this morning. And that was less than 2 hours ago. So if you guys want to, kind of know what happens in the ForexAnalytix community, that's it. If you want to know how to get there, it's that little button right here next to your icon. And so, you want to be where we're at all day. That's it. And then on top of that, you get all this great technology that ForexAnalytix offers, as well. And we did upload a lot of the charts, because we have updates that have gone through in a lot of these currency pairs. I mean, look at the Aussie, as we're, struggling at this, 77.40 level. And let's talk about some of these pairs right now. So the euro just hit new highs overnight. And we've gone a little bit further than I thought. I thought we would stop somewhere in the 70, 80s, but we're at 123. We held the ascending wedge support on Thursday of last week. Now you can see we broke this trend line, but because it was very thin liquidity, we actually have to draw it now down to this actual spike low back here on November 23rd, which makes sense because now we're going to be laser focused on 122. As long as 122 is holding, the bulls are in control, but we break below that 122 level and you are going to see a bit of a pullback in the euro. There's a lot going on this week. You've got in a couple of days, you're going to have big protests in Washington, DC about, and it's really Trump is organizing this whole thing. And we had always said he's not going to go away quietly. And it doesn't matter that Biden was quote unquote elected. Trump is not going to go away quietly, and I'm wondering if it's going to, bring on some risk aversion, and that's something that we need to be aware of going into the next few weeks. And obviously, with risk aversion brings in dollar strength. There's another thing that we have to look out for is we have to watch this Georgia race, which is, it's looking increasingly likely that some Democrats are going to take seats from the Republicans, which is going to give us a, more of a Democratic controlled, Congress. And then, then it becomes a wild, wild west as far as, how much liquidity gets put in the market, what's getting passed, and the dollar could suffer as a result. So there's a lot of like moving pieces that we need to keep an eye on over the next couple of weeks. Obviously, I'm just going to be watching price action and let the market kind of guide how I deal with this market. But I mean, and then one other thing that I wanted to mention, I mentioned this on my tweet, and then we're going to go into the charts. We're going to go into the bias charts. So, well, let me pull up the bias chart really quick. If you guys are new, which most of you aren't, and most of you have been listening here for 5 years, longer, whatever. We go through this bias chart every day. What I don't talk about every day is I don't talk about cryptocurrencies. Steve, hits them sometimes, and obviously Dale brings on a lot of folks that cover crypto. And one thing that I have to say is that we've been bullish Bitcoin and Ethereum for a long time. I mean, for a long time. If you look at our analysis, the basic technical analysis tab, which has been green, has been bullish for quite some time as we've broken out. The thing is right now is Bitcoin does look like we are going to start a little bit of a pullback, and that's why I wanted to pull it up today. I'm looking at Bitcoin rallying above 30,000, and as long as we hold above 30,000 and 20, it's really 28,000 that I'm most concerned with right through here. I think it's bullish, but we might be at risk of a little bit of a pullback, especially if we break back below this trend line here. And this is a 4-hour chart, so you guys can just kind of see what I'm doing here. For those of you that trade crypto, I have a feeling that if we break back through this, 27,000, you're going to get a lot of the fast money coming out of crypto. Now, it'll most likely be really quick, and any move back down to the low 20K level, so 20,000, 22,000, probably find buyers. And I would not expect us to stay down there long. So you have to be on your toes if we do see a move like that. But the way that we've been moving, I think it is, it's possible. And then you look at it, Ethereum's had this great move, but we are at a 78% retracement of the long-term move. Okay. A pullback in Ethereum back towards the towards the $600 level would not surprise me in the least bit based on the volatility that we've seen. So a reason why I'm pointing all this out is because if we start to see a little bit of cryptocurrency weakness, what you're probably going to find alongside that is some precious metal weakness, which might lead to some dollar strength. And that's what me as a currency trader, that's what I'm mostly concerned with. Am I bearish cryptocurrencies? Hell no. I actually would love to buy Bitcoin at 20K. And I might actually buy some at 20K if we dip down there. The question is for me always, how do we get down there? How long does it take to get down there? And what's the price action like when we get down there for me to be a buyer? I think it's going to be a quick dip. And if you're not around with bids in there, might pass you by really quick. If for some reason we just kind of grind down there for the next 2 or 3 months, I might have a different opinion on how I approach cryptocurrency. If it takes us a month or two to get down there, but we eventually grind down there, I might second guess that, decision. So again, it's 20K seems like a great place to be a buyer as long as volatility continues to stay high. But I'm more concerned about how the market starts viewing like riskier assets and how it starts to view the dollar. So Anyway, those are my thoughts. Hey, Dale, before I continue on some
Yeah,
analysis here, I don't know if you stepped away, but
I'm here.
oh yeah, do you have any thoughts you wanted to bring before I start on the analysis of all these majors?
No, I just really looking forward to another year with the team. In April, it'll be year 4 for Face, and what I felt, I now know that this is the best team, collaboratively and individually, um, and we put on the best webinar, free or paid, on the net, and I'm just glad to be part of it, Blake. You know how some people that become subscribers say, "Oh
Yeah.
God, I'm so glad I found ForexAnalytix." Well, you know what? I feel the same way.
Awesome. Well, thanks, Dale. It's great to have you here. It's been 4 years of Face already.
That's a lifetime in this business.
It is. So glad you've been with us this whole time.
Yeah.
I heard some comments about Bitcoin. I see some of your guys' comments, and like I said, several weeks ago, you guys might recall, I said it's probably going a lot higher. The reason why, retail's not so much involved anymore. I'm not getting the calls, and you're not
Yeah.
seeing the people before that you were 3 years ago that were calling you around Christmas time, called me at Christmas time when Bitcoin was at, just below these levels or wherever. And they're like, I'm going to, should I be buying here? And, I had actually my nephew's mom calling me.
Yeah.
I was like, huh? I'm like, you work for a pharmaceutical company and you don't know anything about cryptocurrencies. What are you doing calling me? And so, when I got those calls, I was really concerned 3 years ago. And as I told you guys 3 years ago, I'm like, you guys don't want to be buying cryptocurrencies up here. But, over the last year, I've been more constructive on the price action. Um, and this right now, you're not seeing, and I had teenagers coming to me 3 years ago, telling me that they're buying cryptocurrencies. That's not the case right now because everybody got burned 3 years ago, all those people. So yes, now it is the big money that's stepping in and buying cryptocurrency. I do think that this move is real, just from a more of a macro perspective, or a positioning perspective. I'm sorry. Macro too, people, it might become more mainstream. I still think that regulation is going to be an issue moving forward. And so that's something that obviously you have to be keenly aware of, because that would cause a major turn, is when you start to see, governments crack down, to what extent they can, who knows. But anyway, let's get into the currency charts right now. So we have an ascending wedge with the euro dollar. Obviously the market was falling on, and this is the euro, this was on Thursday as we slid towards support, and we've gained all that back. Obviously there was very little liquidity on Thursday the 31st. The markets recovered. Problem will be is if we can't scale new highs, then we stop making higher highs. And so I think we have to watch the resistance at 123.10. Okay, so 123.10 is resistance. We are still bullish while we're above that trend line, obviously. Support right intraday. I'm going to say intraday support is going to be back down here. So intraday is going to be 122.60, 122.60. Yeah, I think that's going to be good support on the way back down. Okay. And then below that will be obviously 122.15. I'll have to write that too. All right. The cable. So the cable's been trading heavy all day, and we are at really critical support right here for sterling bulls. Just so you guys know, this is it. I mean, this is the trend line. It is slightly descending, slightly. This is big support, this 136 level, and below 136, we could realistically see a move down to 135.25. Now, trying to sit here and figure out why the hell the pound's so heavy, but this COVID situation in the UK, is really weighing on the bulls right now. And we had this breakout. You got a lot of short squeezed out of here. So I would say that post Brexit, you got a lot of the short squeezed. Maybe you start to see some selling come in here. I think intraday, if we get a move back up to 136.65, anybody who's long is going to be really happy to sell. So just 36.65. I have to put it at bullish right now, but I'm a little nervous. If I was long the sterling, I'd be a little nervous here. I would be. It's bullish today, but if we come in tomorrow and we're trading down here around 135, I'm going to put it back at range. So just letting you guys know. Aussie dollar. Aussie's bullish, but now we're at risk of facing a double top. There's 161% extension that comes in at 77.50. I do believe that is really critical resistance today. 77.50. I don't even know if we're going to see it, but I have a feeling if we break new highs, it's going to be very brief. So if we break new highs, we'll hit that 618 and then reverse. Okay. But we are at risk of, forging some sort of double top here. So if for some reason we come back down and break through this support right here, which comes in at, let's call it 76.90. If we break through 76.85 actually, but 76.85, we break through that, you're going to have to be a little careful. Is that 76? Yeah, 76.85. We're at 77. Yeah. So if we come down and break through this support here, next thing you know, you got a double top, right? You have a double top, which would actually, whoa, I didn't mean to do that, would lead us towards the breakout point here. That's, again, I'm not saying that's going to happen, but I think we have to be a little careful, forging some sort of double top here, especially if the dollar starts to rally back. And you're seeing it rally against a lot of different currencies, which I'll get into some more of them here. Kiwi's trying to make a lower high. That's a problem if you're bullish. Support right now is going to be 71.70. It is bullish. And I try to explain to everybody here all the time is, look, being bullish, the Aussie or the Kiwi, it is bullish. We are in a very strong bullish trend. There's no doubt about it. But that doesn't mean that I'm always going to be long. I trade counter trend. But it's important to know when you're going counter trend. Like if I'm bullish the Aussie and I decide to short it, I'm going to take a little bit smaller position being on the short side because I know it is in a bullish trend. Same thing with the Kiwi. If I could be on the short side today. I'm not right at the moment, but if I wanted to, I just know that we're in a strong trend. So I'm just not going to be super aggressive being on the short side of the Kiwi. All right. Support is 71.70. Resistance. So actually 71.70 right there. Resistance right now, I'm just going to mark up these highs at 72.40. Now, this is an important currency to watch. Dollar Canadian. Dollar Canadian made a new low. I mean, if you use ForexAnalytix, you already got this update. Okay, and you guys know that I'm playing this right now. We got a false breakdown when it broke back above 127 today. That's a false breakdown. And that was an hour ago when that update went out. Okay. So this move below this low has now created a false breakdown. So that is extremely important support today, 126.65. And resistance would be this gap fill here at 127.55. And I'm going to write down resistance as being right there, 127.70. So 127.70 and 126.65. And you guys know I've been in range with the Kiwi or with the Loonie, and I'm going to keep it that way. The reason why I'm going to keep it that way is because when we came out of this, 161% extension out of this descending channel, that break higher and squeeze, that's pretty impulsive. And so I think this is a big range. And that's why being short down here doesn't make any sense to me. There's other things to play dollar weakness against. And the Kiwi or the Loonie, excuse me, is not one of them in my opinion. Dollar Mexican peso also held its support. 1970 is really key. I think intraday, a move back above 1985 would be, 1970, 1985 would take us back to, just so you guys know. Okay. And I'm keeping that on range too, because we came out of this, descending wedge, was a month and a half ago, squeezed the heck out of the market. And now we are range bound, very similar to the dollar Canadian price action. Okay. Moving along, I got to give time for Steve and Stelios. I know those guys are here and I don't want to take all their time. So the dollar Swiss, this is interesting. Oh, shoot. Okay. After the dollar Swiss, I need to talk about one last thing. Well, I got to do the other pairs too, but I got something else that I wanted to bring to your attention today. So the dollar Swiss, check out this. This is the previous channel we were following, right? All we're doing, even though we hit a new trend low, we're still respecting this channel support through here, right? So that support right now comes in. I'm gonna write down the lows, which will be 87.85. Resistance right now is 88.60. It is bearish. But just keep in mind that 87, I said 87.75, right? Okay. US dollar, Norwegian krona, descending channel, same thing as the dollar Swiss basically. But again, we have to just be a little careful if we break 865. So support today is 847. 840, whoops. 847, 865. It's bearish. Okay. Oops. I'll come back to the dollar index and the S&P and gold, but let me just do the dollar yen really quick. So the dollar yen, we continue to forge new lows. Now, this is a really important, I want you guys to see this. See this daily spike down here in March. This is post-COVID lockdown move, right? That trend line there. We were holding that as of last week. We weren't breaking below it. Nobody broke below it and back up again. That is, again, these are those things that pop up that you're like, oh crap,
Stop hunt.
Yeah, I got some stop hunts going on, and if you're short, you got to be a little concerned. So I'm going to write down these lows right here at 102.70. Resistance right now is all the way back up here at 103.90, but I would be really careful with shorts there. So 102.70. 103.90. It's bearish while we're below this trend line, this pink trend line really, or actually this red trend line, excuse me, which right now would come in at 103.90, 103.80. But while we're below there, we have to stay bearish. As you guys know, I know you've heard me say that a lot. It's just be a little careful chasing it down here. Let me go into the dollar index really fast. And then, the dollar index, we're at the 161% extension, divergent relative strength. You guys, I know we've been writing down 89.50 as support here for, I don't know how long. So
about a month.
Yep. And we finally got to it with
Yep.
very divergent relative strength. It's
Yep.
161% extension of this move. So now if we get back above 89, so basically 90, a squeeze will probably happen. So you guys got to be careful with that. It is bearish. And then I'm going to say good morning to Stelios and Steve. Good morning, guys. Channel resistance.
Good morning.
Hey,
Good morning.
Stelios, how's it going? 3,800 would be channel resistance. Let me get rid of this. And support intraday will be 37.18 or 37.20 really. So 37.20, 3,800, it's bullish. And then we're going to wrap up with gold. And Stelios, gold and silver are ripping this morning.
Yep, they are. They're ripping without me, I'm afraid.
Oh, without you? That's
it's okay.
So I think silver just broke the 127% extension, actually. Yeah, we did. And we just actually took out those recent highs. So gold, I mean, gold's hitting new high. I mean, this is, one of the things that's going to keep the dollar weak is when you have precious metals moving. This is an 88% retracement right now on gold.
And nice work by Steve Volge on the 2021 blog, being bullish of gold on the verge of a breakout. Good call, Steve Volge.
All right. Well, Steve should be here.
I am here.
1900. Just writing down support here. 1900. I still think that I still think that gold, Steve, is range bound at the moment, just because we've been in this range for a while.
I think we've broken. I think we've broken higher because I have this whole correction lower as a channel. Just draw the line. Yeah, exactly. And now draw the parallel to that.
Yeah.
As support.
Actually, yeah. And I guess that would be like this, huh?
Yeah.
Close to
Yep.
Something like that.
Yeah.
Yeah, we just broke that trend line. So that's, I guess it's bullish while we're above 1907. So let's go ahead and change that to bullish. And so, hey, I want to mention, this is your bias chart, guys. I got to step out for a second because my dogs are actually barking, but somebody had mentioned, and it's early in the morning here, it's still dark here, and I need to they're starting to rustle around. I need to make sure that they don't wake up the entire house.
You have to make them breakfast.
Yeah, I do. The one thing I want to say is somebody was mentioning about a European broker. Look, if you guys want to try to get ForexAnalytix for free, try Pepperstone Securities. They are a sponsor. Pepperstone is one of the biggest FX brokers globally. They're one of the top, probably top 10. You have to use this link right here, and then you get 2 months for free when you open a live account, and then another 2 months when you trade more than 500 or five lots, which would be 500K, which is
Let me clarify. They don't have to do like a trade of that size. Cumulatively,
thank you.
Cumulatively, when they trade 5 lots, which, I mean, even if you trade rather small, you would rather soon do that.
Yeah.
Then you get another 2 months.
Awesome. Well, thanks for explaining that. I'm going to roll, but guys, thank you so much for tuning in today. And thanks for being here with me. Stick around, because obviously Steve and Stelios is going to give you their thoughts, and Dale is going to continue to give you his thoughts. And he's got a great interview today. So thanks everybody for joining in. I'll see you guys tomorrow morning.
Okay, Blake.
Thank you, Blake.
Good hunting, Blake.
Thanks, guys.
So happy New Year, everybody.
Happy New Year.
And it's going to be a great year. I'm sure of that. First of all, we're not going to be talking about Brexit that much. So that's already
that is definitely a positive.
Yeah. Yeah, so I hope you all had a good holiday and recovered a little bit from all the eating and drinking. And we start with the new year, and apparently we're starting off with a bang. And risk on, everything's going higher except the dollar. And we pick up where we left off in December.
And it is to be expected, I think, Stelio. I mean,
seasonality is definitely bullish for the first days of
yes.
January. It always is.
Yes, and nothing substantially has changed to actually produce some type of a reversal.
Yeah. Yes. So we continue like that. Obviously, we want to see first couple of weeks of the year, see how things develop. But overall, nothing's changed. We have the vaccine being rolled out in quite a few countries now for COVID. Although I was reading, I don't know if it's a fact or not, but I read somewhere that scientists are saying that these vaccines are not effective for the new strain, how you call it, new strain. So that, I'm sure they're going to, whatever needs to be developed, they'll develop it. It just means that it's going to take a little bit more time. So, in that respect, you can expect some kind of return to normality eventually, because, when you do have a vaccine and you start rolling it out, well, sooner or later, you're going to get back to, like I said, to normality. So we wait to see how that goes.
Yeah, we still have a long road ahead of us. There is no question about it. I can't say names, etc. I have one of my friends that works for one of the biggest companies in the US that owns hospitals.
Mm-hmm.
And they actually own a lot of hospitals in states that are, considered like of the wealthy ones. So he was telling me, and as I said, I can't share any more details because those are confidential information, that they have roughly, they cover an area that has like 10 million people, and so far they've managed to vaccinate something like 0.2% of the population.
Yeah.
And that's big news if the vaccines are not effective against the new strains. They're not saying that publicly here yet, still, but I think a lot of the euphoria going into year end with Pfizer and Moderna, and we're going to have infrastructure spending and the Fed at our back. The most important thing, I think people may be, like Steve saying, a bit too optimistic about these vaccines, especially if it doesn't work against these strains. It could.
Even if it works, my point is that the rate of vaccination, and if you remember, we had this conversation also at the end of the year, although less people were here, because in essence everybody was in vacation mode. In another conversation with a really good doctor friend of mine that is also, he's not only a doctor, his first degree was in molecular biology, so he's he has a foot on both worlds, you know what I mean?
Mm-hmm.
He was telling me that duration of immunity for the vaccine should be anywhere between like 2 to 5 months. So let's say, assuming 3-4 months on average. So combine that with the rate that we're managing to actually vaccinate people. As I told you, they've vaccinated like 20,000 people in the US in a population of 1 million that they so far, from the 10 million they cover, like they've so far in essence reached out to 1 million, and they vaccinated 20,000. So that all that tells me that we have a lot of time ahead of us.
Yeah.
They say, guys, that 1 out of every 16 Californians are infected. That's
doesn't
huge.
Sound unlikely to me. Yeah.
That's pretty huge.
Yeah.
Easy to see 15, 16 people in a normal day, right?
Yeah, absolutely.
In an abnormal day, which has been an abnormal year, already.
Yeah.
Yeah.
Anyway, so you know what? We've got our trading accounts. We've got intelligence gathering and collaboration. So sometimes you have to, see what's offered to you. And what's offered to us right now is still to be able to trade, generate revenue, and, gives us, you should stay focused, because this is one of the only activities you can do unless you're, like Steve, and can go to the beach in the winter in Greece.
Yeah,
So
this year the weather has been just unbelievable. I mean, for winter time.
So Steve, what do you think in S&Ps here? You were
To begin
thinking
with,
that,
I think that gold has broken out.
Yeah, you're good call.
Silver had made the move earlier on, right?
Yeah.
Last year, actually, the silver broke out last year, retested, backtested, if you want. The broken channel is continuing higher. Platinum, if you remember, we were talking about it, behaved exactly as expected. I mean, this proved indeed to be a bull flag. And, the next upside target is 1171. Here is palladium, also attempting to break through this symmetrical triangle. So let's see if that can happen as well. Here is copper, which in essence just consolidated in a range, and so far remains extremely well bid. Here is nickel, that in my opinion has a decent chance to have found a low here at this horizontal support resistance area. So pay attention to that as well. Here is crude oil that remains, well bid. Admittedly, momentum is not what you would want to see, but on the other hand, do we have a reversal in hand? No. And now, speaking of which, here is the S&P, and if you look at the Nasdaq, it's exactly the same type of formation. We've had this conversation last year. When we discussed the possibility that these ascending triangles are not terminal formations, right? I specifically mentioned that, I would have liked them very much as terminal formations, as ascending wedges that would, in essence, indicate the end of a trend higher if the inclination of the formation was much steeper than it was. Be it what it is, though, which it isn't. I think there is a real possibility that we just break out from here and produce perhaps a final leg higher in the short term, some type of a melt up. I don't think it's unlikely as a possibility. So keep that in mind. In any case, I would not try to fade this trade. At the end of last year, when we had this reversal and we had the recovery, I took a very a very cautious short position as a short-term trade, because the risk reward was amazing. I mean, the risk was very, very minimum, and it didn't work out. And since we didn't manage to actually have follow through in what looked like a nice reversal candle there, as I said, we're starting the new year. The first days, at least of January, are, as Stelio said, historically and bullish, and seasonality favors the upside. And who knows, we might see a melt up here. So be very, very careful. I would really not try to fade this. Here's also the DAX, if you want to have a look at a European index. Here's the DAX, which is currently, I'm zooming out so you can see, so which is currently trading at all-time highs. Here's the FTSE, far away from the all-time highs, but still looks rather nicely. Perhaps another consolidation that's going to break to the upside. So for the time being, and if we also have a look at the DXY, there it is. For the time being, there is nothing here on the charts that tells me that we should be trying to fade the the theme that we had during the past couple of months of the year, not until something substantially happens. At some point, there's going to be a trigger to squeeze people out, because a lot of people due to FOMO are going to be jumping in. As always, the retail crowd is going to jump in, is going to probably capitulate in trying to, for example, short indices or be long the dollar, and it's going to try the other direction. And probably when they do that, it's going to be the totally wrong time to do that. But until that happens, I think you shouldn't be trying to fade any of that. I don't think you should be long the dollar. I don't think you should be short the indices. We need to at least see some kind of a daily reversal along with some type of an event that will give us some kind of a belief that, there is some kind of a theme developing that might last at least a few days to a few weeks. Until that happens, it's, the status quo, right? Stel, did we have anything else before we go to questions?
There's a couple of little things. OPEC Plus actually are going to be meeting, I think it's today, and they're going to be deciding whether to increase production in February or not. There has been some chatter about them increasing. The question is, how much and how long, etc. So there's going to be talks about that. And to be fair, with the oil, with WTI near $50, I think it's a price where not everybody's happy. Obviously, the Americans want it higher because they have much higher extraction costs. But still, it's getting there.
And
slowly.
likely that's one reason why they would want to, OPEC would want to slow down.
Yes.
The rate of appreciation, because I think they want to really squeeze out American producers.
Yep.
I mean, think about it. The vast majority of OPEC countries are not really friendly to the US, right? Some of them pretend to be friendly, but in all actuality, if you notice, I don't think they're really looking, for the best interests of the US.
Yes, and otherwise, there's it's going to be a relatively busy week in terms of data releases, which eventually will have to start mattering. So they have to start to matter at some point. But we had PMIs today, manufacturing PMI. I think tomorrow is services PMI, and the numbers are kind of mixed. That was better than expected in the UK, worse in Europe. Better in Switzerland. It's a bit mixed, but overall, we're going to see some data, and obviously we have payrolls on Friday.
Mm-hmm.
The first non-farm payrolls number of the year. I bet there's going to be fireworks there. But
let's see if the mother will care about it to begin with. I mean, we might see some fireworks having to do with the number, but will the market care? I don't know, mate. I mean, the market in a mode that's like, good news. Oh yeah, great. The economy is getting back on track. Bad news. Oh, nice. The Fed will have more excuse to step on the gas even more, or anyhow to not let the monetary stimulus train take any stops. So it's like heads or tails, you win. We are currently, at this mode.
Maybe, but as I said, I think eventually they're going to start to matter again.
Yeah, but let's see when that eventually is. I mean, I have no doubt with you. Speaking of which, something that you might not have noticed, because usually these go like, they go a little bit unnoticed because nobody really cares about them, because they're not actionable, as market information in the short term. OECD, in essence, photographed a change of stance having to do with austerity. That like austerity perhaps is not the way forward, and people are really fatigued, and it's not going to work. So in essence, one by one, countries, institutions, and everything else is like pushing towards fiscal, abnormality. And in the short term, that might keep fueling, risk on and everything is okay and who cares and that doesn't matter, deficits don't matter. And we might see, this period of living in La La Land getting extended, but I'm pretty sure that this is going to end really, really badly.
Okay, buddy, you there?
I'm waiting for Stelio.
Sorry, I'm here. I just had my daughter asking me something. What was the question?
No, it's okay. Don't worry about it.
Okay.
So natural gas, by the way, since we also pay attention to it, once again, coming closer to the moment of truth, found support at this beautiful confluence of the 61.8% FIB and the 200 daily moving average, attacking this channel once again. Listen, I remain quite convinced that this is a corrective move lower. And as everything that has intrinsic value, I think that it's a matter of time for natural gas to explode higher as well. So because we have friends frequently asking about natural gas, my bias remains bullish. Let's see if we can break out this time. Okay. Now let me go through some of your questions, guys and gals. Mark is asking if you're long silver, Stelio. If you're still here, by the way.
No, I said I'm going to be long on a weekly close above 26.50. I think we closed 26.39 something like in December. So I'm
Somebody
waiting.
else.
I think
Yeah,
I will
go ahead, mate.
I think I will start getting long. It will depend, but yeah, I think early next week I'm going to probably start.
Somebody else is asking about Bitcoin and Ethereum. Listen, Bitcoin and Ethereum remain very bullish. I haven't had a position in them. I'd rather own metals. Somebody can say, yeah, but dude, you could have made a lot more money. Listen, I have some friends that have a lot of money on the sides, which I don't have a lot of money on the sides. I use most of my money for my trading account, etc. And I did advise them to get some, and two of them actually did. Personally, I don't want to own stuff that I don't understand. I mean, I do see, and I kept seeing that they're very bullish, but I don't want to own stuff that I don't understand. For me, any price of Bitcoin makes the same sense. Bitcoin at 5,000, Bitcoin at 10,000, Bitcoin at 100,000 is the same thing, if you ask me, because in my opinion, they're equally logical. Okay. Now, this is a market, right? It's all about demand and supply. So yeah, it can go to wherever it wants to go. But as most of you that have been listening frequently, you know that my background is, in economics, and I may not be trading based on fundamentals because they don't give like triggers, but I prefer to trade in the direction that fundamentals tell me to do so. So personally, I can't get myself, buying stuff that I really don't understand, and I believe that they have a chance of also going to zero. Okay. So I do think that at some point we're going to see a very sharp corrective move lower, perhaps even back to 20,000 in Bitcoin, if we're referring to Bitcoin, right? Which is probably going to be a nice, buying opportunity, right? But personally, I'm not going to get involved, right? And here is Ethereum, which as usually is trading with a lag to Bitcoin. Now look at this formation, by the way. And this is another example why I'm saying watch out with the S&P. You see, this formation is very similar to what we have to the S&P. Yeah. Exactly. So that's why, because I've seen formations like that, many people try to interpret them as ascending wedges that will lead to a reversal. But as I said before, and Ethereum here gives us a nice example, be careful, because when the inclination is not really steep, these type of formations can actually produce, a vertical move. Blow off, yeah, out of
throw over blow offs.
Yeah. So, be very careful with that. Dale, I guess it's time for the first interview of the year. Am I right?
Yeah. And new year, first time guest. I'm really looking forward to speaking to Salah. He was recommended to me by Mandy. Everyone knows Mandy, and
Mhm.
I'm just going to get Salah. I'm going to get you set up now,
Mm.
and thank you, Steve. We're gonna kill this year, bro.
Let's hope so. I mean, I think it's going to be an interesting year.
Yes, it already is. All right, so Salah, I'm asking you to unmute. I want to welcome you to our community. Welcome to Face. I'm
Hi
hoping you.
guys,
Hey, Salah,
I hope
welcome.
you can hear me and
Can hear you, and Happy New Year to you, my friend, my new friend. And the green box lets you share your screen.
yes, sure. And first of all, thank you so much being invited here. I followed the first time this webinar and it's really, really informative. I'm actually started as a Forex trader, of course, and still be favorable with Forex, of course. And this is a webinar that I will definitely join, not the last time. So it's really, really interesting. Really nice, interesting ideas, which I really love. And this is what I want to share with you, first of all.
Well, I appreciate that. And like I said, any referral from my prior guests like Mandy, I always extend the invitation. And I want to take you back in a time machine, Salah, because I know where you're at right now. You're out of Germany. You're
Right.
with IG. You said you used to focus on FX. Why don't we go back to perhaps what was your first position in the trading business or investing business, and tell us about your origins and how you ended up from point A to point B. Just a little bit about that.
Yes, yes, of course. So just like you said, I am living in Germany. I am the head of markets at IG for Germany, for the Netherlands, Switzerland, and Austria. So actually here in the central of Europe. I'm trading more than 15 years now. This is my experience that I have. I started actually with trading a stock, which is Infineon in Germany, which is almost 15 years ago. Starting really with no experience. I didn't have any person that was already involved in trading that I know. So I really started from the beginning. Step by step, I also was interested in economics. I studied economics. I have a master's degree in economics with specific on quantitative methods and capital market theory. So this was something that I wanted to gather more information about, not just because to get a degree for myself in trading, because I always recommend to everybody who is listening here or who is starting to trade, education is the key. And you need to really take out the greed out of you and start to learn. There are paper accounts. You can visit webinars like this wonderful webinar where you can learn and start to get your own ideas. A lot of people are starting to copy and trade other people, and this is what we experienced. Of course, everybody of us, this is not the best way. Get your own way and learn. I had so much time. I'm still learning in trading. Everybody of us it's a
never-ending endeavor.
story. Exactly.
Yeah.
And the success gets better and better.
So let me ask you, Salah, did you have any mentors or any books or anything that really influenced you? And how long would you say it took you to become at least, where you felt like you could earn a living off the market? Because a lot of people, that's their dream, is to just trade for a living. And people have asked me, Dale, can I trade for a living with 10,000? And I said, yes, if you want to live beneath an underpass. So why don't you tell us about who influenced you? And then I want to get into something proprietary that you've come up with, kind of the Salah Dean Bollinger Bands, which you call the Boumidi bands, right? So how long did it take you to become a decent trader to where you were starting to be consistent?
First of all, my mentor was just the technical analysis. I didn't have a personal mentor, but I'm still a technical analyst, and I love to trade patterns. We have seen the webinar now today, a lot of nice triangles, trading ranges, everything what I use as well, and what I recommend as well to learn and use it. Actually, the book, which was my mentor, was John Murphy's technical analysis. Of course, this is, I think, a must be and a must have for everybody who wants to learn technical analysis. Then, of course, Schwager, seasonality, seasonal patterns was something what I really was interested in. And today I'm a conditional trader. So going forward, I was, of course, seeking a new approach in volatility trading. And this is the fact why I created the Boumidi bands. We have a lot of indicators from Bollinger to RSE to moving averages, everything really good practical indicators. But what I was feeling like, where is the implied volatility? There's no indicator who was, taking into account the applied volatility, kind of. And my approach was creating a kind of Bollinger Bands. I met Bollinger also in Switzerland and talked about my ideas, which he really motivated me and said it's a good idea. So I started to say, look, could we create a kind of Bollinger Bands, not with historical volatility, with implied volatility, meaning taking the VIX or taking the VDAX in Germany, taking for gold traders the OVX, which is the gold price volatility, for WTI. So there are a lot of underlyings where you could apply the implied volatility on a bandwidth. This is what I do. Maybe I already shared my screen, and I think pictures show more than 1,000 words, definitely.
Yeah, you do.
And on TradingView, this is maybe one example for the DAX. It's already implemented by me here in TradingView. You can see the lower Boumidi band and the upper Boumidi band for each day. And
so the major difference between Bollinger Bands and Boumidi bands is it's not past volatility, it's implied volatility.
Correct.
That's the difference.
This is the major difference that we see and have, of course, and which is by calculation, of course, the biggest difference between Bollinger and Boumidi bands. But really nice is also a combination, because if I would just put the Bollinger bands into this chart, you would have the historical and the applied volatility. And we know from scientific papers, what I also tested, the implied volatility always overstates the historical volatility on historical view. So we could also see some mean reversion, finding some stops. I say always the Boumidi bands, the upper and lower band, are invisible support and resistance that we don't see if we just use technical analysis or fundamental analysis or just price action. So we can identify some really nice levels. And this is what I always say, you have three scenarios with the Boumidi bands. Either we are testing the band like we did today, and at the end we close in the bandwidth. So this bandwidth is 86%. Maybe just showing you something really interesting. Here is the calculation. Just saying for one day, what I actually theoretically say is today in the S&P 500, I'm gonna expect that the S&P 500 is going to close within 3,800 and 3,711. So for a probability with 86%, I'm gonna say that we're gonna close in this bandwidth. For 95%, we're gonna have a much bigger bandwidth. And why I do this is just because I have three scenarios, Dale, really easy. Either we test the band and we go back, we can see it historically a lot of times. Either we don't see any movements to the band, so we close within the band with almost maybe 6, 7, 8 days in a row, doesn't matter. Or we see a mean reversion, like that day that we really see harsh pressure, sell pressure, and at the end we come back into the bandwidth. So this is something what I see as a reversal. And you have a lot of possibilities to trade it. Either you trade, for example, CFDs, or you take a future on it, or you create an option strategy where you say, I'm going to trade the bandwidth, because historically said 85% hit profit rate is that you're going to stay in the bandwidth. And it's actually a normal distribution, and it's adapting the normal distribution. What I like is, even in Corona crisis 2020, we have seen that the Bermuda bands are working, and they give you nice signals and shows that normal distribution, even if we have irrational market movements, can be on the long end still adaptable on markets.
Okay, so when you use options and you have a band range, do you put on strangles where you'll sell the puts underneath the band and sell a strike above the bands, looking
Wonderful.
for it to stay within the bands?
Wonderful, Dale. Really nice explained. Absolutely, that's it.
Okay.
Taking the premium.
Right. Okay. And let's say, really, I have an expression that, options are like relationships. 90% of them expire worthless, but you still need some money management for when the ranges are blown out. And, it's like picking up nickels on the sidewalk for a year, and then all of a sudden a steamroller comes. How do you handle risk management being an option writer with your bands?
Really nice. Either there are two, I'm still in research and development of this really good strategy. But what I do, either you close if you just hit the band, just to reduce your risk, because you have unlimited risk, like you said. Really nice that you really mentioned that. Either you close because the profit rate or the hit rate is so big that you will get the days back. So trading in days, saying like, I need 2-3 days back in the bandwidth that I get the loss back. But this is not a risk management, what I would say. I'm hedging with other products if we break through.
Okay. You got a lot of reactions in my Twitter stream by showing how important, I believe it was the first 5 trading days in January are. There's that expression, as January goes, so goes the rest of the year. So what are you looking at here? Do you have to get like a week's full of trading? And then some people look at each candle, or whether it's a bar or a candle, represents a month or so of future potential direction in the market. Tell us how you use your early January trading activity for possibly forecasting or giving you biases for a little longer term.
We talked about it, and I just tweeted it, I think, the day.
Yeah, you got a lot of very good response on that.
Exactly. And how I actually traded, this is something, I'm a conditional trader. And last year it was awesome. I mean, I had an interview on the Amsterdam Stock Exchange. One journalist asked me, I think this week, a year ago, Salah, what will happen this year? What is your vision? I said, we are in an election year. Election years are good equity years. And the 5-day effect of January was positive. So there's nothing to say. We will close higher at the end. There was Corona, of course. I never would know that or recommend it. And at the end, we have been in the plus. So what I do, to make a long story short, I will check the 5 days, the next days. And if we close higher, first of all, I take a long-term trade. I take, for example, with IG Turbo 24s with a really small leverage, where I would say, okay, we close higher than the first day. So this might be a positive thing that we go higher because we have, interest rates are at zero. We are printing money as hell. This will, of course, feed the markets as well. So I take the conditions. This is a long-term trade that I use with small leverage, small risk, just taking, just participating on this effect. And on the other hand, I take this as a trend direction. So if we will have huge dips like in March last year, remembering back Salah, the 5 days effect was positive. We have chances, the monetary policy is also helping. So then I will just come back to this effect and create a story, positive story, not lying to myself, just saying, hey guy, we had a positive 5-day effect. We have a huge drawdown in the markets. So is that a possibility? Of course it is.
Okay, we really have a lot of one-way sentiment in the dollar, and I'm not sure how you feel about it, but to me, the dollar has driven gains across the board, risk on in equities, higher metals, even higher crypto. A lot of people leaning on one side of the boat. It's starting to get pretty, unanimous. I wouldn't say euphoric, but hard to find a narrative that people talk about that could generate any kind of dollar rally. What's your view on the dollar? The consensus is lower, 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 lower. Could that be interrupted perhaps by maybe a little risk off in the market, or perhaps the euro over 120 begins to impact an already weak European economy with COVID, especially in Europe? What's your view on the dollar? And do you agree that all these other markets, it's kind of like the fulcrum of the wheel and everything spins around that center, which is the dollar?
Yeah, maybe just taking a chart to that. I mean, we have seen nice analysis before, no doubt, but talking without chart is for a technical analyst a bit weird. So going back to the chart, of course, taking it for an hour, for example, as well. And we have seen, definitely, no doubt, there is an upward trend, intact, healthy. It's going up higher. Nothing against that. We are creating higher highs, higher lows. Everything is fine. And fundamentally, I just said, a lot of times people ask me that, and I have a really easy story for that. We had Corona. We have massive drawdown in growth. Debt is going higher. Everything, there's a problem. So you need to get back to the normal reality. You need to have growth as a country. You need to sell your products. You need to go back to where you have been. How can I do that? Easily with devaluating my currency. So I can export much more, and I can catch up the economy. The economy can catch up with the markets. So just easily said, from just a really fundamental thing is, I think it's really good for the dollar if it still devaluates, because in this year we need help from stimulus, from other economical power or growth levers, which I would say, and this is something what will definitely give the dollar much more drawdown potential. I think the British pound as well. For me as a European guy, the problem is we are between those both currencies. If they both will still devaluate this year, would have a strong impact on the euro. So we can go shopping in US much cheaper. But on the other hand, we will also have problems because, as you know, Germany is an export nation. And if the euro is much higher, this could also give us some problems here. So the world is actually right now fighting, for their exports. So if the
beggar thy neighbor, so this has been going on for a long time, and the dollar is really probably the best sacrificial lamb to keep things going. As you look, here we are in 2021, and I know that most analysts for major brokerage firms like yours, like IG, kind of have a look ahead into 2021. I'm going to request, if you have anything that you are looking at that you're, kind of in the forefront of what you think could be some of the bigger trades or even trend changes, if you see any coming, or is 2021 going to be same as it ever was? Continued risk on, continued dollar weakness, and everything go up because of dollar weakness.
So we are in uncertainty. In the time right now is really uncertain, to be honest. But what I can see as a trader, of course, I think gold is the risk will still not go down. We will still be in an environment which is a high volatile environment, because there are still problems that are not solved. I mean, we have a vaccine, so people are not vaccinated at all. We have mutation of corona. The trade conflict between US and China is still ongoing, maybe now in the background, but not as before. So there are a lot of conflicts that can raise the volatility, can raise uncertainty. But I think gold is still a safe haven that will be bullish as well this year.
Are you okay? So gold's going to be a safe haven, and as far as looking at your Euro chart right here, Salah, do you use RSI, or you just it just happened to be on your trading view charts?
Thank you. I use RSI, and I use the RSI a bit different than maybe generally, like the general standard. I use a 34 period, which is a Fibonacci number.
Oh, interesting.
And I made a statistical analysis, especially for Forex, because I was starting with Forex, that I have a frontier, which is 84.5.
You put in 848.5.
Sorry, exactly. Excuse me.
That's what you put in. You put in 48.5.
48, exactly.
Yeah.
48.5, which is correct. This is my border, let's say. So
interesting.
If we cross from below to the upside, it's saying to me these are bullish signals. So in this time, we are above 48.5.
Never turned down once it turned up. Very interesting number.
Exactly. Yeah. And this was, for example, my really easy signal. I mean, look, I teach a lot of traders because I love to do that, because I was also a teacher on university, and I like to help because I didn't have the help before. I was creating everything by my own, and I know how difficult that is and how much mistakes you are going to do. And of course, mistakes are good. If they are not in real money, you can learn from it. But I want to avoid people from all the mistakes that I did easily. So, of course, I use it as a signal saying, hey, look, like Dale said, it's the first time that I'm going up. Is it significantly? Yes, much more.
And he pulled back to that 48 number and just cleaned up.
Which was always a buying signal as well. If you go back, and we have seen here the moving averages that have also, like the moving average 55, also a Fibonacci cipher. So you see, I like numbers, Fibonacci numbers, 21. Exponential moving average, but the 55 was always and
Okay.
support, which gave us signals combined with the RSI. So looking on the RSI and euro dollar says we are still bullish, and we don't see, at least if we fall below 48.5, 48.5, sorry, that there is still a healthy positive trend.
Let me ask you this. Do the non-confirmations of the RSI since early December, when it was confirming the move with the RSI, both momentum and price, making new highs, and then the last couple highs, like December 20th, it was a lower peak in RSI, and then the highs we made last week in the euro was even lower than that. So you have like two non-confirmations on the 4-hour. You know, to me, that's at least a warning signal about being long as momentum continues to deteriorate. Do you interpret it that way?
Correct. We can also see a small, what I would say now, a small divergence that you can see here, right?
Yeah.
This is absolute. I totally agree with you. Thank you for that information, because this is right. This is something what we call is a bearish divergence, right?
Yeah.
So this,
you could even go all the way back to early December. That was the last
correct,
confirmed high. So
absolutely.
we're either going to break out, or maybe we're setting up for some type of correction in here over the coming days. What do you think?
Yeah. I would say we will create a new higher high, which is 123, and then we would maybe, I would see here a small correction, which is absolutely healthy compared to cryptocurrencies. If I would say one thing that I want to say to people that are starting, it was the same mistake that I did in the past. Taking a bunch of indicators into your chart and saying, hey guy, I'm using 10, 9, 8 indicators, which is maybe okay if you can use them. But a lot of people, what I did also as a mistake, they use maybe 10 indicators, 9 of them are oscillators, but they don't know.
Yeah.
So please always be aware, what is this indicator doing? And you can have 10 by using 2 oscillators, 2 trend continuation indicators, 2 volatility indicators, and so on, to have a
Great point. Great point. Well, Sala, you survived an interview with me, and do you know what that means?
No.
You're now my new trading warrior brother.
Nice. Thank you so much.
Okay, so I could tell you're a warrior, self-taught guy that had to, take hits and get off the canvas and keep going. My view is the secret to trading is there is no secret. It's hard work. It's living through adversity and persevering. So thank Mandy for me for suggesting you come on, and what's the best way for people to follow you and perhaps learn from you besides, or with Twitter, you're at Sala Boumidi, and is that the best place to find you?
Yeah, it's the best place to find me. I have also a German page, salabumidi.de, where I will implement like the S&P 500 Boumidi bands also here. So this is a test chart that it's my beta version that I can send you over in the chat. Maybe if people are interested, they can also look for it. But of course, just hit me up on Twitter at Salabumidi. You are always welcome for questions, for trading, for everything. This is my passion, like Dale, like everybody of us do. So don't shame, ask. There is never a dumb question.
Oh my God, I say that all the time. Only silly answers.
Exactly.
I knew we were kindred spirits. So I want to thank you very much for kicking off 2021 in face and bringing us, I learned from you that 48 on the RSI is very interesting, and your Boumidi bands are very interesting, and really glad that our paths crossed. And I already have you scheduled for March. So we'll be seeing you again in the spring, Sala.
Happy to be there. Thank you so much, Del, and thank you for invitation.
It was great. Yeah, great meeting you.
Thank you. stay healthy, everybody. Stay healthy and successful. And we're gonna stay in contact, of course.
Yes, and may pips just flood your account in 2021. All right, buddy?
Thank you, buddy.
All right, so that's it, everyone, for today. Thank you for being here. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Let's have a great 2021 together. Adios.